Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to another episode of the Wall Street Lab podcast. Our guest today is Danielle Joseph. Danielle is a managing director and leads the Closed Loop Venture Group platform, the seed and pre-seed investment division of Closed Loop Partners, focused on circular economy. She's also a board member of several companies and startups. Prior to Closed Loop Partners, Danielle worked on clean energy project finance activities, including clean energy, energy efficiency, waste to value, water resources and reclamation, and environmental services. Danielle earned her MBA from Stanford Graduate School of Business, where she led the GSB Impact Fund, an early-stage investing platform for impact-driven companies. Danielle earned her Bachelor of Arts from Pomona College. Danielle is a mentor with Built by Girls, an organization preparing the next generation of female leaders, builders, and creators. Danielle, welcome to the show.
Thank you. It's such a pleasure to be here.
Let's start a bit with, I think we have many things to kind of set the setting, right? So let's start with, what is Closed Loop? What's your stage? I also said seed, pre-seed, and investment focus on circular economy. Maybe you could give a bit of a background on Closed Loop Partners, and then why and what is the circular economy?
Definitely. So maybe I'll start with, what is the circular economy? So everything that is in production today, anything that you buy in our economy, whether it's goods, foods, water coming out of your tap, right? Those are manufactured or processed somehow in a long supply chain with lots of waste, both within that supply chain and after use. Think about all of the food that's left on your plate at the end of the night, or all of the packaging that's in your home. All of that waste typically goes to landfill, or in certain cities across the country, you will see recycling systems. And the idea of closed loop economies is that we are reducing material waste. So we are reducing waste both upstream in supply chains and downstream in supply chains, such that we're never pushing good quality, high value materials into landfill, rather reincorporating those materials back into supply chains to be reused, recycled, recovered. That applies to plastics and packaging. It applies to food and agricultural systems. We do a lot of work also in textiles and apparel, in water, in some clean energy instances as well. But really taking a materials first approach to investing. And the benefit of the circular economic model is that there's always some economic underpinning to making those business decisions. So you're reducing waste in your supply chain. You're also improving your bottom line, and that's core to our investment thesis. Within Closed Loop Partners more broadly, then, we have an investment firm, asset management division, which includes a venture capital arm, which is seed and pre-seed focused investing, which is what I lead, a growth equity arm, a private equity arm, and a catalytic capital vertical. And across all of those asset classes within the firm, we are, of course, investing in circular economy, slightly different stages of company growth. And one of the unique features about Closed Loop on the asset management platform is that our investors, our LPs, are a combination of traditional investors that you might see in investment firms, family offices, individuals, institutional investors, also a number of very large corporate partners that we work with very closely, groups like Unilever, Walmart, P&G, Coke, Danone, Unilever, et cetera. We have, in addition to that, an advisory services business, which runs what we call pre-competitive collaborations to solve for bottlenecks in supply chain. So imagine Walmart and Target and CVS working together to solve for a plastic bag that is a pain from an environmental perspective, but necessary for consumers to take their goods home from retail. And so how do we innovate around that? And those are usually multi-year collaborations that they work with those corporate partners on. So across the entire firm, we're trying to push the circular economy forward, but from the investment perspective, it's always with that bottom line approach in addition to the impact that we're looking for.
Very interesting. And so How did you get started with closed loop? How did you end up with circular economy as such a focus, right? It's a fairly narrow field when you look at the broad terms of VC investments. I mean, it looks like from your bio you have been in clean energy, renewable resources, and all of that for a while. What then drove you to VC and especially to the circular economy?
Great question. Right, I think that you mentioned in my background, have experience both in growth equity and some project finance. And I think throughout my career, I've always been interested in how capital moves and how we can better allocate capital to support the kind of needs and benefits of society, in addition to, of course, making money for investors. Was trying out different asset classes on that journey, always in private markets. I think that's the area of finance that has always most interested me. But when I was probably mid-career, I was thinking that larger amounts of capital would be more meaningful, and I would derive more kind of internal satisfaction from deploying larger checks. And so that drove me into project finance. And what I realized was that those large capital flows are incredibly important, and it's super engaging work. But the timelines were too long for me, and I didn't feel like I could have as much impact as I could have at the earlier stages. And so that drove me into venture, where I was able to leverage, I think, all of the learnings from both growth equity markets, larger infrastructure markets, and bring some of that capital stack financing approach into the early stage and make sure that we're developing companies right from the start.
You mentioned when I asked you about what cue could you give me for an interesting story, and you said you had a major in philosophy. I mean, I read that you have a Bachelor in Arts, but you majored in philosophy. That's interesting enough. Today, I just recorded another episode with a philosophy major that also now is in VC. What's it with philosophy and VC investments?
It's funny, when I was in college, my mother was pretty convinced that I was not going to be employable with a philosophy degree. And so my graduation gift was a box of mints from the Unemployed Philosophers Guild, which is apparently a thing that exists. No, but I think, I think the thing that drew me into philosophy, well, many things, inclusive of like trying to figure out what your place is in the world and what kind of the meaning of life is. But other than that, I think it was really a lot of systemic thinking, right? It's a deep curiosity around like how things work, and that touches a little bit of all different sectors, right? And so you're reading constantly about different theories. It's related to math, it's related to physics, it's related to religion, right? So you get this really broad base of knowledge about how the world functions. And I think that served me well as a framework that I could then apply into different sectors. And so when I started working after college, had some jobs in nonprofits, joined a startup for a little while as well. And at the startup was in charge of also raising some money, and learned about the financial industry effectively through that, pitching to VCs or angel investors at the time. And in 2010, 2011 timeframe, when I was doing that work, VC was a very closed community, right? There was nobody had websites. I don't know if you guys remember this, but it was like, you would go online to try to look at what some company, like some firm did, and it was a landing page, not even the contact information oftentimes, right? It's a very closed industry. And so that got me, of course, very curious about how the financial system worked, also post 2008. So we had just seen the collapse of financial markets, driven by obviously poor underwriting and investment decisions. And so that was a turning point for me, where I said, I want to really understand how financial markets worked. And so did effectively a self-study. So while I was at the startup, I started reading everything from like Warren Buffett and Charlie Munger to Ray Dalio, and just self-educating on financial markets. Took an accounting course at UConn. I ended up moving back home just to figure out how the industry worked, and then had, I don't know, probably 20 to 50 informational interviews with just different people. Anyone I knew who had a job in finance, I asked to have a conversation with me, and ended up actually drawing out a map of the financial industry on a piece of butcher paper and in my parents' home. And like through that mapping kind of pinpointed where I wanted to be, where I thought the most impact could be had, and how I wanted to act in the system. And so that's what drove me into finance, and the start of how I ended up where I am today.
Interesting. My start in finance was pretty much the same thing. Was like I ended school in 2010, just aftermath of global financial crisis, and I'm like, I want to see how those banks work that everybody's talking about. So let me work with one to see how to figure this out. So I take it you kind of wanted to improve the world a bit, philosophy major, working in startups and working at NGOs, and then you saw that kind of finances can be a really helpful tool, if you would say so, to bring you forward with your mission. And then you checked where in finance can I actually pinpoint and like have the the most impact.
Yes, I think that's been a motivating force for me. I think across my entire life. That's also probably a derivative of studying philosophy in undergrad. I think one of the, not to take the conversation too far away from finance, but one of the things that I like firmly believe in as a human is that it's entirely our responsibility to make this world and make our society better. And so I am compelled to do everything that I possibly can in order to affect that better future and better world that I want to live in.
I mean, you're living it, right? You're basically investing in stuff that want to reduce waste, and that's what I want to come back to now with circular economy. I think I heard the term first off from a friend of mine who wants to actually start a podcast about circular economy, and she mentioned it maybe a year and a half ago. I haven't personally heard about that before, and all you kind of hear is the last 5 or 10 years is maybe the opposite. Like globalization, not deglobalization, not circular, like more trade. Since when is the circular economy like on the radar of people, and why? If it is true, my perception, which is most of the time is wrong, right? So why did it prop up over the last years?
So similarly, I also had never heard of the term circular economy before 2017 when I first met Closed Loop and joined the firm. And I think historically, the way I'd been in environmental markets, right? So I was investing in a lot of clean energy projects. And at the time, we were talking a lot about waste to value as a different sector. I think circular economy was probably coined earlier than when I knew about it as a term. I learned about it in 2017, did a lot of work to try to educate the market around me, around the VC community, about circular economy, which is, I think, largely probably the more environmental sector investors, and educating them about what circular economy meant as a broader scope than just waste to value and just converting waste streams into higher value, but truly thinking about how do we do more distributed production and manufacturing of goods? How do we, which relates to onshoring, right? And you're seeing a little bit more of that now as global supply chains break down, right? But I really think the public started to really engage in the term in about 2019. And honestly, I can't tell you what prompted it. One of my observations in energy markets was it was really hard to get consumers aware of the benefits of clean energy systems, even though there were very clear cost savings. It was effectively free for them to install solar on a roof, for example. There was a very clear both financial case and impact narrative for consumers to adopt clean energy. But I think it was a little harder for folks to truly comprehend and get as excited about, in part because electricity is not tangible, right? It's something you turn on your light switch, you don't really think about it because it's so ubiquitous, especially here in the US. Whereas circular economy, because it's touching things like packaging and textiles, it's easier, it's more actionable for consumers to think about. And I think you saw not only it kind of gaining consciousness in 2019, which is the fastest I've ever seen like movement in the energy in the environmental space take off. But then I think the pandemic actually accelerated it, and in part because everyone was ordering things to their home. They were seeing the effect of packaging waste in their homes, right? They were more conscious of what things they had around them. And I think you saw like the Marie Kondoing effect, like in the early days of the pandemic, right? You saw this like just more general awareness. And what's been interesting in the market is, of course, consumer sentiment influences what corporations are then producing and where they're driving towards. And so we had a number of corporations that, of course, were working with us pre-pandemic and as early as 2016 that had signed on to this, that recognized that this was an important vertical. They wanted to reduce their use of plastics, have more recycled content, be more environmentally conscious within their own supply chains, reduce their carbon emissions. But then consumer sentiment, I think, accelerated. It's put more pressure on some of these brands to move even faster. And I think you're seeing the benefit of that now with not only what's happening in the markets just generally, but also government support of a number of both clean energy initiatives and circular economy initiatives across multiple sectors. And so we're really excited about all of the tailwinds that are coming into circular economy today, into the environmental sector more broadly. I think we're very excited to see a lot of focus on onshore manufacturing, not just from a kind of jobs perspective, but also because there is a lot of resiliency that can be gained by keeping material streams in play in local economies. Of course, I think there's going to be more redundancy as we move forward generally in industry. Some globalization will still make sense, especially for high, like kind of throughput and goods. But I mean, you're going to see a lot more activity happening here, which is great for so many environmental reasons, carbon emissions and transport being one major one.
One thing that I probably missed earlier to ask, do you have an area of focus on where you do your investments? Because I think a lot of if I want to be so rough in my distinction, there's like impact investors that invest in technology to like make, I would say, the Europe, North America more sustainable, and then a lot of impact investors try to help like African countries or developing countries. Do you have an investment focus in like the North American Europe focus, or do you also try to invest into companies, for example, in Southeast Asia, in Africa, and help them also build a supply chain, make them maybe less vulnerable to effects in the US, for example?
Certainly. So right now we're on our second venture fund, and primarily our investments are in the US. We also have a number of investments in Israel and Europe, and a handful of investments in Latin America. I think to your point, supply chains are global. There's innovation everywhere. These supply chains need to be they need to change everywhere around the world. And so I think we're open to amazing companies that are maybe on the ground with a lot of the apparel manufacturers overseas today, more so than we might otherwise expect from folks that are based here, trying to build for customers that are not here, right? So I think there's a kind of founder product fit that we're always looking for, and are open to where that innovation comes from. I think what's important is that we always want to be able to underwrite the investment to the US context. And so if it's applicable overseas, like great, maybe that's where it starts, but hopefully there's some type of way for us to help bring that company here, because we're based here, and this is where we can be most additive. One example of that is we invested in a company called Home Biogas, which is an Israeli company that converts food waste into a usable cooking gas at home. It's an incredibly affordable anaerobic digestion system. that can be rolled out. Imagine like a blow up mattress that can be easily kind of shipped to your home. You could roll it out and put it in your backyard, or there are new versions that can potentially be integrated into your home. That's an example of kind of clear economic savings. You think about Europe right now and their inability to get affordable gas, especially in these like kind of coming winter months. This type of solution is something that could really solve for that. They're already deployed all over the world, actually, and everywhere from refugee camps to just home farms or backyards. So really amazing innovation, affordable, obviously clear cost savings, and a huge amount of impact, and not needing to transport any type of organic waste. Could be like food, or you could hook it up to your toilet. Even you don't have to have infrastructure that brings that material to landfill anymore. That most cities are paying, tens of millions of dollars to truck outside of their city limits. Instead, you're using that on site and have a real benefit from it. So that's one example in the food space. We've also invested in a company in New York called Parsimony that supports nearshoring manufacturing. So they will help product designers find manufacturers that have the right capabilities to match whatever the drawings are, whatever the CAD files are that they need to manufacture. So huge potential emissions reductions in transport of both prototypes and obviously kind of scaled manufactured goods. So we'll go direct to consumer, we'll go B2B. We're across all sorts of different materials, again, like with a primary focus in packaging, food and ag, textiles, and supply chain logistics and optimization technologies. But we also recently, for example, made an investment in a company called Solar Cycle that is recycling solar panels, recapturing all of the high value components and reselling those back into industry.
Interesting. I wonder and I ask this every investor that has sustainability kind of in their name. How much of your investment thesis is kind of driven by the, I'll say, classical instrument like founders team, market size, and especially you're pre-seed, so I guess like most of it is like team and opportunity size. How much is driven by that, and how much is driven by the amount of good the startup can do?
It's a great question. So we, of course, are evaluating every company based on team, product, market, kind of the classic VC underwriting and equation. We will not let any company through the front door if it doesn't meet some type of impact threshold, right? And impact meaning, does this fit thematically in the circular economy? We don't have a strict gigaton target, which I know a number of VC funds have. We think that's great. It's very important. It's impactful. We also think that there are obviously very impactful technologies that can support, let's say, gigaton scale impact in the environmental space. But there are also a number of enabling technologies that maybe don't have a direct line to emissions reduction, but are necessary in order for change to happen in a supply chain. And so we wanted to create the optionality for us to be able to invest in those types of companies, in addition to ones that have a more clear direct impact. And so, no, we don't have a strict target for reduction or like waste reduction or CO2 emission reduction, but we do only invest in and look at companies that meet requirement of being in the circular economy and meet our analysis structure, right? We have to be able to validate that there will be impact related to their technology, and we run through a process associated with that. The example that I'll give is in the fashion supply chain today, for example, but also in food. There is almost no transparency into what first tier, second tier, third tier suppliers are doing, where they're sourcing from, where products are in the supply chain. And so the old adage of you can't fix what you can't measure, I might be paraphrasing that a little bit, means that the core enabling technology to fix anything in a supply chain is first to have some level of transparency within it. And so we're very excited about a number of the transparency solutions that are in the market today. I think one of the to your question, like how do we evaluate that? We don't want to invest in like a transparency company for the sake of transparency, right? It's not just blockchain equals dollars in the door, right? We're looking for companies that are creating some type of transparency solution, but simultaneously enabling the business to function better in some immediate way. So that's, there's got to be some type of cost savings opportunity or revenue generation opportunity because of the transparency that you're bringing into the supply chain.
So it always has to satisfy two criteria. Basically, like they get in through the door, into the door once they have the circular economy, and kind of by definition, everything that improves a circular economy is doing good. And then you go with the, I'll say, standard investment thesis where you look at all of those things.
Mm-hmm. Yes, and I'll reiterate that we will validate that a company is beneficial to the circular economy, right? That in part of our diligence, we will make sure that we are not doing harm and that there is active good being done by the companies.
Just because they put slap circular economy on their website doesn't mean they are a circular economy. I mean,
exactly.
I'm in fintech. Everybody slaps AI on their website, but then it's just a pretty harmless algorithm behind it. So
exactly, that's exactly right. And I think that's the challenge of hype in any market, right? AI, circular economy, right? There's increasing amount of noise as there's additional hype in the market. And so one of the things that we try to be very diligent about is, number one, kind of parsing through that hype, but then also sharing our knowledge with the broader market. So if you go onto our website, like you can see us publish a pretty substantial report on demystifying the various types of plastics and biopolymers that are in the market. So, not all new bio-based polymers are necessarily better than plastic. And that's a nuanced conversation around like which ones actually are beneficial to, let's say, compostable supply chains versus recycled supply chains, and how do we think about investing in that space?
That's really good. Another thing that we talked about before we started recording, your portfolio looks a bit different than the classical VC portfolio. That's because you only invest in this one particular space. So you have a very, I would say, concentrated portfolios. Could you talk a bit more about your approach to portfolio construction? What are, for example, the things you really look out for in a company? How do you think about, and I'm taking your words that you said earlier, like your herd instead of your unicorns. Could you give listeners a bit of perspective on how you think about portfolio constructions, what you look out for in a company, and what is important to you when you invest in a startup?
Definitely. I think one of the things that differentiates us from not all, but some other VCs in the market is we have a relatively concentrated portfolio. So we'll, out of any given fund, we're targeting about 25-ish companies. And the reason behind that concentration for such an early stage investment vehicle, right, focusing on seed and pre-seed stage deals, is because we actively want to be supportive and spend time with each portfolio company. And I think that part of that is because we have such a broad and deep network with these brand partners who are also some of our LPs. We think we can be, and of course, just the networks that we have as investors, both within the venture fund, but also across closed loop partners more broadly. We think we can be really helpful in supporting each of these companies. And so we try to be as involved as we can be in supporting the founders. And that's, of course, always a kind of unique relationship depending on who the founders are, what type of support that they need. And we just try to work closely with them on that. And so that's the more narrow portfolio. But then within that, you tapped on diversification and how we think about creating that diversified portfolio, even with a smaller number of companies. And we do that in multiple ways. One is through sector, geography, hardware versus software kind of business model. And so we'll think about all of that in that portfolio construction. Of course, timeline to market, time base within our investment horizon. So we'll work on all of that. But then going back actually to your comment around our herd, I attribute this analogy to one of my colleagues. Because we're investing so early at these seed and pre-seed stages and are hyper-focused on helping to build these businesses, not just into the next unicorn, but into a really stable business, right? We're willing to, in some ways, sacrifice top-line revenue growth if it means that the company can be profitable, right? Or the company can stand on their own 2 feet and make their own decisions in the future. And I think that stems from understanding that early stage, like building a company at the early stages is hard, and that a lot of our founders actually want to be around for the long term, right? Of course, everyone wants to make money and be very successful, but I think we've seen just even in the last few years what some of that hubris does to companies, what some of that extraordinary growth can do in terms of pressure that it puts on the founders to make certain decisions that are maybe not in the best long-term interest of the company, but are rather in the short-term best interest. And so we try to be the right type of partners that will support those founders as they make those decisions for the long term. And so the rest of that analogy is that we're trying to build a herd of horses.
Nice. I like that. I mean, the thing with that many people say why the private markets are sometimes better because you can think more long term versus the public markets where you have to report to your investors every 3 months is that you can make long term decisions, right? You can. But now with this hyper growth and this focus on unicorns and decacorns, you have to, or they make you sometimes cut corners. And I just really recently, I think this week, saw a study from AngelList. I don't know if you've seen it, but that actually VCs perform better if they don't focus on this typical 90% of companies will fail and 10% will make it and will become unicorns. So this approach is actually not as good as VCs that focus on, as you say, a herd of horses, where more companies make it to like triple, for example, the value and not like 10x the value, but they over the long run actually perform better. I don't know if you noticed this maybe in your circle or if you read of the study, but I found it really interesting, which just completely goes against everything that I have been talking about with people in the last 5 years.
I think it's so interesting. And honestly, I don't actually know that we have enough data on it yet, right? Like that, I think it's interesting that you're pulling out the AngelList study. I also recently saw a study that said the exact opposite, right? And I think that because VC's been closed for so long, right? I don't actually know that we have enough actionable data on it. And the markets are, we're in a cycle. And so like, what does it all mean? Like, it's so dependent on timing. And I think that I of course agree with the outcomes of the AngelList study, and I think our funds are hopefully going to demonstrate that's true. Also, having this approach, I think, also does require a different type of mentality for investors. I think I was on a panel at some point, and somebody said that being a VC is kind of a masochistic career choice because you, of course, are doing the day job, which is, finding companies and doing the diligence and figuring out what the right investments are. But then you're also getting emotionally invested in, 5 to 10 companies per person, and like trying your damnedest to like be part of their team and like do as much as you can for them. There's not a lot of time left in the day beyond that.
I think that we founders and investors have in common. It can be really rewarding, but it can be also damn masochistic to do a startup. The heights are higher, the lows are lower. It's just a very volatile environment. You mentioned it, the current market environment, and I would like to have your opinion. Do you see it also affecting your circular economy investments, the recent downturn, or do you have a more positive outlook? Because now I think I read that the US is going to spend like billions of dollars to improve sustainable investments. Are you more bullish or bearish over the next couple of months?
So I think one thing to remember is, recession, there are a lot of different conflating factors here. There's truly inflation, right? That we've been experiencing for arguably the last, 10 months or so, even more. And then obviously recession that's been also probably boiling for about that long. I think we saw early indicators of it much earlier in the year. And so that is obviously going to cause a change in consumer behavior and preferences. And again, have already seen indicators of that. I think what it will mean for businesses is a refocusing on cash, which we've already seen being pushed for in VC markets. Investors at the Series A level, for example, are trying to make sure that their investments are there's a pathway to profitability, which you obviously see in recessions and then don't in the two years preceding. So I think there's a change in there's definitely a change in behavior that's coming. I think the benefit the tailwind is definitely in favor of circular economy investing and a number of these kind of clean energy and sustainability related investments across the board, because they do create that bottom line economic benefit for corporations that transition quickly. And we're seeing, we've seen the outcomes of this even throughout the pandemic of companies that, for example, had onshore manufacturing, were less reliant on global supply chains, that were able to more accurately respond to changes in demand by changing their supply and production capabilities. And so we continue to be very bullish on the sector within circular economy. I think you'll likely see us be very active in the coming 6 to 9 months.
Right, can't wait to see what's coming out of there. I want to bring this slowly to a close. Typical questions for me to at the end is, if I'm interested in circular economy, then I guess the first thing is, where can I learn more about circular economy? And then maybe if you want to tie this into a section you probably also know, how should I get educated if I want to start investing, maybe become a VC, become an investor in the space? Any tips that you might have for our audience?
Definitely. So circular economy, if you want to learn more about it, I actually think our website and newsletter are great resources, as is the Ellen MacArthur Foundation, which is based out of the UK. There are also a handful of books that you can read. Two. I don't mean to actually just push my colleagues on this show, but they are some pretty great books. One is co-written by Jess Long, called The Circular Economy Handbook. It's a really good primer, largely for company CEOs, but accessible for the general public, on what the circular economy means, what some of the actions that can be taken are, no matter where you are, whether you're at an investment firm, you're at a company, you're managing a company. And the other is by our CEO, Ron Gonen, who wrote The Waste-Free World. I think the other resources that I really like are Waste Dive is a good kind of just overview of what's happening in the space. But a lot of the typical clean energy and kind of broadly environmental publications are also now starting to cover a lot of circular economy. So you'll start to see it integrated with hopefully some new knowledge from the podcast. And then in terms of VC, I think we didn't talk about this so much when I talk through my story, but there's a lot of luck obviously involved in kind of meeting with the right people at the right time. But one of the things that's changed from, I think, when I got into the space versus today is there is a lot more democratization of VC. There are a lot more funds that are out there. There are some more clear pathways in terms of like what types of backgrounds different VCs are looking for. There are jobs that are posted, like closed loop postage jobs, as do many other VCs on either their kind of own websites or kind of common platforms. I think as you're applying to those jobs now, in addition to like reaching out to VCs and trying to develop relationships yourself, which is probably advice that you've heard in the past. I'll tell you maybe more about what I look for in a hire, which is an extraordinary amount of hustle, right? And curiosity. Hustle because, as we just mentioned, this is a slightly masochistic job, and you have to be intrinsically motivated to get in the weeds and not only find amazing founders, but also to work with them and be deeply convicted about their businesses and treat them like your own in some ways. I think the other part is that innate curiosity, which we touched on also a little bit earlier, and maybe this is my bias as a philosophy major, but I am always looking for people who are trying to understand the world and are pulling in different points of reference in order to inform that opinion. And so background matters less in terms of like what you actually studied or what prior careers you've had, as long as you are pulling on all of those experiences to help you make the most informed decisions. And then I think the third point is that you can clearly articulate the whys behind everything that you're doing. And so if you're starting to have conversations with VCs and can like start to demonstrate those three things, that is, I think, the thing that's probably most impressive and that I always look for.
Fantastic. Thank you. I think that leaves us at the end of this really fun conversation. Do you have anything that you want to put through to our audience, anything that they should think about that you want to mention? Or you mentioned a website a couple of times, how to reach you. Now it's floor is yours to to put some last words here.
No, Andy, I want to thank you so much for having me today. And I think probably the thing to leave your audience with is like, I hope that there's optimism out there, whether you're in financial markets or you're, in another career, that there's a tremendous opportunity to make change, no matter where you're sitting. And I'm here as a friendly face and relatively accessible if you want to come join the journey.
Thank you so much. Thank you for the insights into the circular economy. I've certainly learned a lot today. That's why I love the podcast. I learned about topics that I hadn't, dig deeper into, and I just have this experience of, I don't know about the topic, so let me just ask the very experts in the field and get them to ask all my silly questions. So thank you so much for coming on the show.
No, really appreciate it. Thanks so much, Andy.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Hey again, this is Andy. I hope you enjoyed the episode. If you did, please leave us a 5-star review on Apple Podcasts or wherever you get your podcasts from. Share the episode with your friends, with your colleagues, and everybody that is interested. And if you want to reach out, feel free to drop us an email, a message on social media. And I look forward to hearing your thoughts, your comments, your feedback. And thanks again for listening. Have a great day.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products, and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.